Chris here. It is April 23rd, and boy, did we have a wonderful day today with hedge fund levels. I'm going to show you a couple of screens here today. I really like the small T-bar sizes on oil. It seems to work really well. Had a really good, like yesterday and the day before, and I'm going to show you those as well. But I also have a theory on some larger speeds on the NQ, which I think you may be interested in. So for today, and I'm just looking at the morning session. I'm Central Time, so that's why my chart here is 8:30 onwards. And what you see here is just right off, within 7 minutes of market open, we got a beautiful signal here. I know that we've looked at a 1-to-10 ratio. But what I was thinking was that there may be a lot of people like myself who trade with prop firms, and there may be a trailing stop loss and things like that. So taking too much risk may not be in everyone's purview. So I said, okay, well, let's look at some lower risk options here and see how that turns out. And boy, did it turn out well. Today I'm going to show you an 80% success rate on a T-bar speed of 5. Which is very small on oil, but it seems to work really well. I went with a 1-to-3 ratio, and I know that previously we discussed putting the risk at the halfway mark, half a bar, but I went a full bar, especially on these small sizes. I feel like that just gives it a little bit of more wiggle room and significantly increases your success rate. So right here you can see we got a buy signal here, went right in, target of 3-to-1 ratio, hit that target. That was, if you're trading just one contract on oil, that is a $300 profit in your books. Of course, you could have kept going. I mean, you probably could have gotten the, maybe 1-to-7 or something like here. But, I was happy to just keep the risk low. That was part of my test for today. On to the next one, just a few minutes later. Again, a beautiful buy signal here. Again, just taking the full bar risk because it's such a small T-bar. It's not a huge amount of risk. 1-to-3, again, boom, hit the 1-to-3. Then we keep going here. Later on in the day, we did have a loser. Okay, you're not going to have 100%. Like I said, this is an 80% success day today. Within minutes, we had another beautiful buy signal. Had a small little bit of a drawdown, but bam, hit that 1-to-3 profit ratio, another $300 in the pocket. Then a few minutes later at 10 a.m., again, look at that beautiful buy signal here. Just pumping right up, no drawdown whatsoever, just beautiful. Again, you probably could have gotten the 3-to-6 or 3-to-7 here maybe. So, someone who's willing to take a little bit more risk, maybe trading with a bigger drawdown type account, that's an option. But for me, I just wanted to try out this 1-to-3 option. So let's scroll on. Let's see what happened. And I think that may have been the last one. I only do the morning sessions anyways. So that would have been my last trade for the day. So that brings me up to, a net P&L trading just one contract of $1,100. So let's quickly look at the next one here. I changed the break speed just a little bit, not a whole lot, and this is a T-bar speed of 6, and it significantly changes your signals. So what I would say is, whoever uses this, you really need to play with the speed. Even just a single speed size can make a big difference. And it really depends on what your goals are and what type of trader you are. Here I have for you a beautiful sell signal that came, 8 minutes after market open. And the blue line represents a 1-to-3 risk ratio, like I showed you in the previous screen. So that got hit nice and easy right here. I believe it looks like it got hit right there, but even if it missed, it did come back and hit it later on. And then the next one is a 1-to-10. So that would have been a beautiful $1,200 profit if you traded one account. Now, if you traded 1-to-10, you wouldn't have taken this trade here because you still would have been in an open trade. Okay. But if you traded the 1-to-3 risk ratio, you would have taken this trade, assuming that you're taking all signals, and that would have been a loss. Okay. And then the next one would have been a loss regardless. But again, you can see the losses are tiny. Okay. $120 a pop there. Let's scroll on. There is another buy signal. Beautiful 1-to-3 ratio. Great. If you played the 1-to-10 ratio option, it would have gone up and then came all the way back, and it would have been, you would have been stopped. Potentially you could have put a break even, or you could put a trailing stop. So you probably still could have had profit if you actively managed this trade a little bit better, maybe had a trailing stop or whatever the case may be. But for the 1-to-3, beautiful, just beautiful. And that was the end of the morning session. So if you did the 1-to-3 ratio, that would have been 4 trades, 2 wins, 2 losses, so 50% success rate with a net P&L of $480 if you traded one contract. If you did the 1-to-10 ratio, that would have been a little bit of lower of a success rate, just 25%. But because of the risk to reward ratio, you would have been up $840 at the end of the day. So just really great. But let's look at the NQ in a higher speed here. This is a 30 on the NQ for today as well, and a little bit of a different outcome here. Just again looking at the early morning session here, beautiful trade here, 1-to-3 ratio again, but because it's a bigger speed, you're putting more risk on the table, but the reward is also great. Like a single trade here is on a single contract is $1,000. Okay, then a few minutes later, buy signal, beautiful, look at that, $1,000. Okay, just great. I'm still going to look into this one a little bit, but just wanted to throw that hypothesis out at you as well, and want to show and share some success that I saw throughout the day.